Good afternoon, ladies and gentlemen. Thank you all for coming to this event today. We've got Mr. Saito, who is the, as you all know, the Chief Executive Officer of the brand new group that he is overseeing, namely as a result of the merger between the Tokyo Stock Exchange and the Osaka Stock Exchange. Saito-san will talk for about 20 minutes, and then we'll go straight into the Q&A, and we'll finish at around 1:30. We'll start the Q&A with the working press before going with the other guests. I've told Mr. Saito that we have a nice number of people here, so we can have a good, thorough, in-depth discussion. What a stock exchange is these days is almost become a philosophical question. Especially in Japan, perhaps, where although any fund manager will tell you that when he's investing in Asia, he obviously has to look at Japan. But you have the peculiar situation in Japan where companies are extremely cash rich. They really don't need to raise a lot of money. There's something like $2 trillion on the on their corporate balance sheets. Personally, having worked in Hong Kong, what I especially noticed when I came to Japan in 2009 was the very small number of IPOs. In Hong Kong, there were sort of 4 or 5 IPOs a week. In Japan, you were kind of getting close to that a year. Maybe not quite as low as that, maybe it was 10 or 15. But certainly, it was a remarkable slow pace of activity. The other thing I noticed was the incredibly low frequency of foreign companies. Back 20 years ago, there were over 200 foreign companies listed on the stock exchange. Again, when I came over, that had shrunk to, again, if not quite single figures, we were only just above single figures. So that whole idea of Japan becoming an international financial center did not seem realistic. And of course, is the point that the stock exchange has collapsed catastrophically in volume and in valuation since its heyday in 1989, when it reached 40,000 points. As Saito-san pointed out just before lunch, even at 16,000, as it is roughly around now, there's still quite a long way to go before arriving at that point. However, in 2011, talks started, the merger occurred. So the question I suppose that we're going to be looking at today, is this a bright new future for the Tokyo Stock Exchange, firstly, but also if the Tokyo Stock Exchange is effectively a symbol of the broader health of Japan, does that mean that there is a bright new future for Japan's economy as well? How are the two intertwined? So without further ado, let me hand over to Saito-san.
Well, thank you very much, Mr. Slater. It's a very honor for me to have a chance to make a short remarks on the exchange today in front of such a distinguished guest. As he mentioned that I'd like to make my remarks as short as possible to make prepare the Q&A session as long as possible. They already mentioned that last year, January the 1st, we launched this new name of the company, Japan Exchange Group. The merger combined the complementary strengths of the Tokyo Stock Exchange and Osaka Exchange in the cash equity and derivatives market. We aim at market expansion and efficiency to improve user convenience and raise competitiveness. As you mentioned, the competitions among the exchange in the world not so much reported in newspaper, but it's a very, very competitive. It's almost every day something occurring between the exchanges. July 2013, already we integrated our cash equity market and the Tokyo Stock Exchange. And also, respectively, as you see here, we consolidate our self-regulatory and clearing functions. the integration of derivatives markets and the Osaka Security Exchange scheduled for March this year will complete the reorganization of our market functions. So we expect this to further increase convenience for investors and their market participants. The JPX cash equity market is ranked third behind New York and Nasdaq in terms of both market capitalization and trading value. About 3,400 companies are listed. That is the largest number of the companies listed in the world on the exchange in the equity market. However, in contrast to that, JPX derivatives market trading volume ranks 14th worldwide and comes in the only 7th even in Asia. Derivatives market expanding globally, and major exchanges are shifting focus towards derivatives business. As you know, even New York Stock Exchange, who has 220 years history, were bought by only 15 years history IC, a derivatives company. The Japanese derivatives market position remain very low, particularly in the field of commodities, which are not our area yet. So to expand our and Japanese derivatives market, we will consider to enter into the field of commodity in some time, not so much short time, but at the end of the day. After the Abe administrations came to power in December 2012, as you already know, the prices, stock prices and trading activity rose as investor sentiment turned positive on the back of highly encouraging the development in the form of the rising expectation for so-called Abenomics and monetary easing measures as an unprecedented scale. The Nikkei stock average rose by about more than 56%. That is the highest in the world last year. And the average daily trading volume of TSE first section stock reached 2.6 trillion yen at the end of 13 to return to this is about pre-financial crisis level. Stock market gains in 2013 were a result of expectations of improved corporate finance, corporate performance due to hopes for the new administration's growth strategy and the yen-dollar exchange rate returning to a more, in a sense, reasonable level. However, even though there is sign of a recovery, corporate performance has not returned the level to the pre-financial crisis level. If the implementation of the Abenomics growth strategy brings a full-fledged recovery in corporate performance and also turns investor expectation into a belief from expectation, I think we will continue to see strong market condition for some time. In terms of GDP per capita, Japan's ranked 10th in per capita GDP in 2012 among the OECD nations. We sharply fall down from the third placed ranking 20 years ago. And worst, the situation was about 14th in the rank, but now we came back to the 10th. And as far as the 2012 is concerned, Japan's per capita GDP renewed its record high for the third consecutive year to $46,537 US. With Abenomics bringing about the structural reform to increase the competitiveness of the Japan's industries, Japan is on its way towards regaining its position in the global economy. Abenomics is aiming at the ending deflation, he repeated. Then evidence, CPI is starting to rise. The national CPI for 2013 will be released at the end of this month. That will be likely turn up for the first time in 5 years. Prices are expected to continue higher for some time, due to in part to the effect of the planned consumption tax hike to 8% from the current 5% next April, and the drop of yen value. The government dropped the word deflation from its monthly economic report for December for the first time since October 2009, signaling the economy is turning around. We are beginning to see the impact of Abenomics in the real economy. Consumer sentiment is turning more positive, corporate performance is recovering, and leading to increased capital investment and an improvement in the wage conditions. This year, we must ensure further progress on these developments and work to turn these hopes and expectations among both domestic and overseas investors into a stronger belief or confidence. Judged in that light, the Abe administration has performed the tasks such as entering the negotiation on TPP. He is setting Abenomics in motion, typified by 3 arrows. The growth strategy itself does not contain something completely new. However, the important thing is whether it would be put into action. From this aspect, we could hold the promise for Abe administration. Though some concern the negative effect by consumption tax increase, the cabinet approved the supplementary budget for 2014 worth 5.5 trillion yen plus another 1 trillion yen to compensate the effect. Therefore, the negative effect would be limited, we hope. One major market-related measures of the growth strategy of the Abenomics administration is to encourage investment in venture business. We at the JPX will also strive to contribute by increasing the number of IPOs. Japan's IPO market has been on the uptrend since bottoming out in 2009, as he mentioned already. Last year, we saw 58 IPOs. Their performance has been very good. All 2013 IPO stocks opened above their public offering prices, and about 60% opened at 2 or more times of their public offering prices. Post-IPO performance has also remained strong, with more than 80% of the IPO maintaining stock prices at about their public offering prices. We will have a foreign company IPO next month. The company Acusera is a biotechnology venture that is specialized in the ophthalmology. Very difficult. Optical, anyhow, glass. It will be our first foreign listing since we welcomed Citigroup in 2007. Another key measure in the growth strategy is the strengthening of corporate governance. At JPX, we will continue to channel our effort into initiatives at enhancing corporate governance. The percentage of listed companies that appointed outside director is increasing every year. As of August 2013, 62.3% of the TSE first section companies appoint 1 or more outside directors. However, problem is quite a few companies only appoint 1 outside director. In November last year, the cabinet reached the decision on the draft amendment to the Company Act. While it stops short of making it mandatory for a listed company to appoint outside directors, it explicitly states that the listed company will have to disclose the reason for not appointing outside director in their business reports, and that they have an obligation to explain at the general shareholders meetings. In line with these amendments, we, our exchange, have also revised our listing rules to require listed companies to secure at least one independent outside director. Analysts reveals that the percentage of the independent outside directors contribute to ROE. As such, we are as an exchange encouraging listed company to appoint more independent outside directors. In this way, the combination of the Companies Act and the listing rules will achieve a Japanese version of the comply or explain regime that is implemented in Europe. The supplementary provisions of the Companies Act also clearly indicate the review of these issues of mandatory appointment of outside directors 2 years after the enforcement of the current act. As such, we can expect to see even more listed companies appoint independent outside directors. This month, we launched the new index, the JPX Nikkei Index 400. The index incorporates ROE and indicator of corporate profitability as a key selection criteria. The JPX Nikkei Index 400 was developed to be composed of companies with high appeal for investors, which meet requirements of global investment standards such as efficient use of capital and investor-focused management perspectives. The index aims to promote the appeal of Japanese corporations domestically and abroad, while encouraging continued improvement of the corporate value. While topics is composed of all first section stocks and the Nikkei stock average components are selected based on the market liquidity criteria, such as trading value. The biggest feature differentiating the new index is that these component stocks are selected based on fundamentals. This is the first time in the world. On a global basis, the ROE of Japanese companies of about 5 to 7% is low compared to that of the 15% in the United States and 13% in China and Germany. By making ROE a key selection criteria, we hope to change the mindset of listed companies and parties involved in the capital market towards capital efficiency and help to raise the quality of Japan's securities market as a whole. That's all about my presentation today.
Thanks very much, Saito-san. So a short, crisp introduction, as it were, and now we've got the next 40 minutes for Q&A. I'd like to ask, going back to my point earlier about sort of almost a philosophical question about the role of stock exchanges these days. What is your definition of a stock exchange? What is the core function of a stock exchange? You mentioned in your speech, actually, that the traditional definition of a stock exchange, which is to raise money in a public process and to get one price, is gradually fading away, and that derivatives are becoming much more important. We've also got this huge expansion of high-speed trading and dark pools, which of course are taking the light away from a public process of setting a price to something which is completely mysterious to most investors. And of course, a lot of people are saying that this kind of trading is going to be the locus of the next big financial crash. They believe it's very much underregulated. Of course, there's a very popular book doing the rounds now called Dark Pools, which my friends at Reuters tell me is a must-read in the technology sector there. But anyway, Saito-san, tell me a little bit about your philosophy of a stock exchange today in the 21st century.
Well, I think the basic missions of stock exchange hasn't to be changed at all. Our role for the society or business circle is that how we can offer the right venue to find out the price recovery. Fair price and efficient price as much as possible, and provide the risk money to those who are not issue the debt or borrow the money from the banks because of the business model risk or so. That is a basic, I think, missions. And the high-frequency trading or these very short-term fast traders join to this market. But with this type of participation, we take it rather positively that they are improving the more and more the liquidity. And in that sense, mathematically, they are creating or participating to create the as accurate as possible the price. Not the the real price is not discovered on the market, but this is a matter of the mathematical game. So the more participants comes in variety of the viewpoint, the more we will find out the better price, efficient price. So I'm not so much negative on this participation from these genius, high-speed participants. Although as an exchange, we are not the how to say the any speculative, the game place. So we had better, or we must have the regulations to keep the orderly market, and excessive participation has to be to some extent to the control or the checked. Tokyo or Japan Stock Exchange has been long time has this type of history, the ideas, and that type of ideas were long time to some extent criticized and looked down as an controlled market or not free, unfettered capitalistic market. But very ironically, after the series of scandal, in particular in the United States, on this machine trade, even the SEC in the United States, Washington's approaching us that how Tokyo has maintained the orderly market even with this type of high advanced, high liquid, machines. We have a very precise regulations on the pricing of the market. We learned from the long history of rice trading in 1700 in Osaka. So we introduced that type of thing. Most of our price are auction. The first price started of auctions, matching, perfect matching, and closing on the perfect matching. U.S., Europe market doesn't have that kind of perfect matching system. They open the gate, just free, and lot of buy order, sell order rush in without any matching. So their market volatility is very, very high. But we have very orderly market in the nature. So now even U.S. SEC are trying to learn from this system.
Okay.
Yeah.
Thanks very much, Saito-san. Anthony? Please raise your hand so that I can see it. We're both blinded here on the days by the lights at the back. So.
Anthony Rowley, Singapore Business Times. Saito-san, as you said, the performance of the stock market has been very impressive over the past year, but given the sheer size of the Bank of Japan's qualitative and quantitative easing program, it would seem that there's potential for the market to go much higher. Do you agree? And if not, why not? And do you think that Japanese banks are likely to be prepared to lend against stock purchasing as they were at the time of the bubble economy, for instance? And if I could just quickly ask you on something else, there's an enormous need in Asia for long-term finance for infrastructure and other reasons, mainly infrastructure. Do you think there's some way in which the Tokyo stock market could cater to that need by producing special types of investment products that would channel Japanese savings into long-term investment?
Thank you. On first questions about this relationship with the monetary policy, rather extra relaxations of the monetary policy by the central bank and the stock exchange, that definitely the basic problem of the slow economy, as you know, was not so much the monetary matters. That is lack of demand, the overproductions, overcapacity. So that, as you know, in Japan, not only Japan, but even the United States also, we had a lot of cash. Like our housing account has 16 trillion yen dollars of cash. Or, as he said, the corporation. Today, even the U.S. corporation has extremely liquid cash. Then we feel no matter how interest rate goes down, no demand on the money is coming in. That is a problem. So if economy is very healthy, the interest rate goes down to 1%, or even in Japan, less than 1%, even in the United States, only 2-3%. Demand must have been recovered. So what was the reason? That definitely we are facing the oversupply of the product because of innovations, because of the change of the IT system, whatever it is. Too fast, too radical innovation is going on in this world. It's a historical first experience. So monetary policy or budgetary policy or fiscal policy are not matching with them so much. Very much mismatch on the balance sheet, true. So our concern is that I don't know, Mr. Kuroda, probably he said here something, another further relaxation or so. But even QE3 in the United States seems to be very expensive or dangerous already. QE2 might have been better or good, but QE3 might have been excessive. In other words, once Bernanke-san just softly touch upon the tapering of QE3, the market collapsed. All over the world are facing the same situations. So if we relax too much, supply too much the government money through the central banks, we cannot leave this affluent money on the market because of the fears of inflation, bad inflation, not positive. So we have to taper or draw back this money. Then what would happen? While we had affluent money on the market, any price of the goods or stocks or real estate asset might go up, expected another price hike. But suddenly, once they hear the news that the government or central bank are thinking to taper off or withdraw because we fears of the inflation, that's a very dilemma. That means interest rate seems to be going up already. Because of that, central banks has to think to taper off. But that will further accelerate hike of interest rate. That will kill the economy further. So we must be very clever. We must be very careful to make this relaxation supply of the money. Today, that will be okay. U.S. already decided, in a sense, to gradually taper off these QE3 portions, QE2, later. But in Japan, we are very concerned. If we see some further difficult situation this year because of the hike of consumption tax or whatever it is, whether our government, central bank, will further relax the money policy, or government think much more some relaxation or regulations or cutting down the tax tax or something like that. I think a combination is very important. Further relaxation of monetary policy in Japan will not necessarily be so much positive on Japanese stock market. That is my private feeling. That is the situation. And as for the infra fund, that I'm very keen concerned about infrastructure fund be listed on Tokyo. Because U.S. has about 40 trillion yen size of this infrastructure fund. In Singapore, 1.5 trillion, something like that. By far, United States is by far ahead in this business. And I myself was used to be involved in that kind of development with the infrastructure fund in the United States to develop the some stores or bridges or corporate product. In Japan, we have a physical problem. So on this, even the Olympics, whatever it is, or development of solar, windy, electric generator, we must introduce this infra fund. PPP type of the joint work is necessary. Plus, as you mentioned, with this our affluent fund in Japan, we like to provide this money to Asian friend. Asia is facing the keen shortage of infra fund, public money. Quite big money, Vietnam, Indonesia, Cambodia, India needs this fund. So our JBIC playing the very major role for the funding or guarantee, but there's some limit. So I'm proposing ideas to launch the infra fund in Japan and list that fund on Tokyo Stock Exchange and collect the fund and send that money to Asian friends. That is my idea. That yes, going on.
Thank you very much, Saito-san. What is the you talked about fundamentals in your presentation and just now as well. You also talked about QE. Maybe I can ask you perhaps a slightly dangerous question, but in terms of the rise of the TSE over the past 12, 15 months, what percentage of that is due to QE and what percentage of that is due to an improvement in fundamentals of corporate Japan?
Wow. Very, very tough question because probably because of QE and because of QE, yen devalued first. And that's improved the corporate performance, profit. So that was mirrored on the stock market. So that I don't have any accurate figures at how much QE itself positive work on this price movement, or how much the corporate performance contributed. But this is a kind of a link,
right.
Yeah.
Yeah.
So definitely what I can say that without that very aggressive, unusual QE policy by Kuroda-san, we could not see that kind of a recovery of stock exchange, definitely, yes.
Okay, thanks very much. Shun, did you put up your hand?
Yes. Shun Kobayashi from KVH.
Hi.
Thank you very much for your
Thank you.
talk. KVH is actually one of the official providers of ARROWNet circuits. If you know, the ultra low latency, so connecting JPX matching engine with the financial companies, including those high frequency traders that you mentioned actually. Well, I just happen to be an associate member here, so I'm going to ask you a question as a citizen of Japan rather than obviously which is not just business. So, 2 quick questions and 1 proposal, and they're all related actually. I think this year Japan is, it's really important to have growth, especially from the private sector. And Ms. Kathy Matsuya of Goldman Sachs, she proposed this womanomics policy 14 years ago, and now our government is taking it quite seriously. How much do you think, do you buy that? She says that potentially if you utilize women in the labor force, you can increase GDP by 14% potentially. And secondarily, well, thirdly, GDP per capita. I like to suggest that maybe we should start looking at it on an hourly basis. So hourly per GDP per capita, because if you want women to be more, participate in the economy, we have this long hour working culture in Japan. Then obviously we can't have family, we can't have children, and that's an issue. But if you look at the GDP increase per capita, but hourly basis, if we manage to increase that, eventually we can have shorter hours of working. So you talked about bringing strengthening corporate governance of Japanese companies so that they can grow more. But I also like to suggest that maybe you could perhaps encourage Japanese companies to start bringing this new measurement of hourly per capita GDP. So thank you very much. Yeah.
Well, you'll be very much appreciated by the Mr. Abe. I think Abe-san is very serious about the women power. Yes, I know Kashi Matsui is a leader of this women power innovation. That already it's discounted on the market. Our population is going down, and we are facing the shortage of the labor powers also. Definitely, we have a lot of genius powers, intelligent power in among women. So why not? We should give the women to be the more chance to be the leader of corporations or society. I think Japan already decided to move in that direction. It's a very, if I may say this kind of thing, this occasion, that in my personal opinion, the journalist company, newspaper company, the worst to use the woman power in Japan. We see the very few Japanese senior women in Japanese newspaper company. So even in the UK, there was a lot of argument about 20% levels, but I heard that already they are broke through the level of 15 or something like that. Without any so much mandatory, rule or regulations, I think eventually we are forced to rely on the women power more. And they are well educated, they are very talented, and we are on the process of changing, to be honest. So we cannot see the very radical from tomorrow. We see so many women leader or president, CEO, but definitely we are on the track of the women powers.
Thanks very much, Saito-san. You're not a macroeconomist, so that was a slightly harsh question. But anyway, Stefano, would you like to ask a question?
My name is Stefano Carrer for the Italian Economic Daily. I have two questions. First, can you summarize why the Japanese stock market is still not competitive in attractive the listing of foreign companies, and in the future, how could be more attractive? And the second question is, what do you think will be the best way to act for Japanese companies? They are sitting on too much cash, too much liquidity. From one side, they are under pressure from the government and the unions to raise wages, and from the other side, they are under some pressure from, especially from foreign investors, to raise dividends, do buybacks, on more capital efficiency. Yes. In your opinion, what they should do? Yes. First, thanks.
Okay, great. First of all, the foreign stocks listing, we are very eager. We want them to come here, but we have a couple of problems that if they distribute their stocks in the retail market in Japan, they must prepare the Japanese versions. That is very expensive to translate all the documentation into Japanese. So cost is very expensive for the issuers. And we already picking up the US GAAP as well as IFRS and the Japanese GAAP. But this information is not prevailed yet to the the candidate of the company. they still believe that in Japan they must use the Japanese accounting standard, but it's not true. Even the U.S. or international IFRS can be acceptable for us. So we have to work, advertise more on this kind of improvement. Although soon after I joined this company, I rushed into China, and I brought 3 companies from China. But we met the very, very tough problem. Their company is mostly not the mainland China, actually mainland Chinese company, but they use the Cayman Island. And the one company, the president stole the money of the companies, and he disappeared. And another company, that's a very good environmental machine company, they are reporting a lot. We are doing this way, this way, this way. And we send that inspector to the mainland China. They are not doing. So, it's a very difficult. Even in the New York market, met a similar type of the problem. So, particularly Chinese company are very keen interest in the listing in abroad. But we must be very careful to protect the investors.
So are you turning down a lot of companies? Are you actually getting a lot of people applying?
They 3 of them, disappeared. And naturally, not because of that, we are not negative at all. Definitely, we are looking for. So that we invited, before last year, we invited 2 Korean companies. It's a very nice electric phone companies. And as I told you, very, very small, but this time optical company, there's a Canadian company is coming. And we prefer the double listing of these because as far as we have the double listing, we can consult with the counterpart authority of their quality or information. But if we pick up the very independent single company from any countries without any check of their mother country's authority, we cannot, investigate if anything happened, investigate into that country. That is prohibited. Even in the United States, as you know, Big Four accounting house check that quality of the company, and they listed on New York Stock Exchange. And that was almost false information. So Ms. Shapiro tried to get into the Beijing, and she did. And she asked the Beijing, Chinese government to hand over the documentation. Big Four accounting firm that is originally U.S. To hand over the documentation, checking paper, but Beijing government rejected. So even Ms. Shapiro could not do anything. Then they delisted about 80, 60 companies, Chinese company from New York. Okay, that similar things is occurring in even Singapore. And after the Chinese company raised a fund, they disappeared. So a lot of problems occurring. So we have to be very careful. I'm not negative at all. We would like to increase, but with a very high quality, and we would like to improve the accounting standard. And we have to share the counterpart government to foster this company. That is answer to first question. And second question, the cash is, yes, they have so much cash. And then fundamentally, the reason behind of that kind of affluent cash, they don't have any, they don't think so much strong demand on the capex. Because again, I told you, we are facing the overcapacity. Unless they have a very new something, traditional style of capital spending to increase the just number of the production, volume of production, doesn't make sense for them. Even in the U.S. corporation are facing the same situations. So naturally, in U.S., they are buying back a lot of the stocks, so their stock price is going up. But nevertheless, even U.S. corporation has remained a lot of cash. In Japan, one problem, unlike the U.S. or any other foreign friends, is that we have a lifetime employment system. And on this lifetime employment system may have made us the very stable society. No so much volatile, the struggle between the capital size and the labor size, whatever it is. But up until 60 years old or 65 years old, if company can keep the business, they cannot fire the employee. If they fire and if they are filed a suit on the court, they will be defeated. So always corporation are forced to prepare the cash to pay extra money if they need to, shed off the excessive labors. They have to pay a lot of compensation, and they need a perfect agreement of retirement or leaving the company from their labor side. So social structure itself are very costly of Japan. That's quite similar to the Germany, but as you know, Germany has changed the policy. So they are now enjoying the very high mobility of labor powers with less expensive labor wages. That is the reason why Germany is recovering. But our point is that whether Japan can introduce that type of labor system or not. Abe-san, Mr. Abe, is challenging to do that. But naturally, he is already facing the very tough opposition from the labor unions.
Okay, interesting point about the companies retaining the cash on the balance sheet in order to pay for potential layoffs.
Yes.
Presumably they believe in the deregulation of the labor market could happen, or maybe for demographic changes, it's going to be a big exodus. And
Yes.
Your point about risk was also very interesting, because a lot of investment bankers that I've spoken to, they feel that the function of the stock market is not to screen the companies in such a strict fashion. Really, it's a sort of caveat emptor, so the buyer bewares. If the buyer makes a mistake, then that's his fault. It's not really the function of the stock market to say who the investors should invest in, or who they should not invest in. So that's just a comment I've heard from foreign investment banks.
I think as you know, only our exchange has the self-regulatory group. U.S. New York Stock Exchange used to have, but because after they commercialized that exchange, a lot of shareholders criticized the low profit margin of New York Stock Exchange. So they gave up these self-regulatory groups, and they transferred this group to the NASD. But in Japan, only one exchange in the world has very perfect self-regulatory groups. So we are regulating, we are checking the quality of the company very carefully. So that's sometimes that is too tough and so. As far as this SME or green sheet type of a company is concerned, we are thinking to relax the regulations. It's a very interesting system. In the United States, if after when they launch the internal review system or reporting system, they ask us to imply the same rule here as in the United States. So we introduced the same as a U.S. regulation. But last year, before last year, suddenly U.S. faced the difficulty of the economy. Then they jump into the change of regulations of so-called jobs law. And they relaxed the very much widely the regulation requirement on this disclosure or anything. So now, last year, they enjoyed about 130 companies listed, of which about 80% use this jobs law. That means disclosure rather limited. And they try to invite to the crowd finance. So crowd finance will be the next prospected business for us. That means broker might lose the job, but with some, how to say, deep explanation, prudent explanation of the risk of the corporation, real risk of the business, we might imply the same type of regulations or less regulation on this type of corporation to this. That is a key to stimulate economy, because SME is only one sector to absorb the unemployment. No incumbent big company are absorbing the unemployment, because rather they are eager to shed off the excessive labors. So in order to absorb the unemployment, the more we need that the SME new company, and they will absorb this excessive labor on the market. In the United States in 1929, 30, they did the same thing. This time, Obama-san did the same thing. So even in this Japan, I think grow up this SME listing their company is very mission for us. That is my ideas. Yeah.
Thanks very much. Let's go with Sanjeev, and then Henry, and then Anthony. If you could keep your questions short and to the point. We've only got 10 or so minutes.
I'm Sanjeev Sinha, country head for Tata Asset Management in Japan.
Yes.
Prime Minister Abe is visiting India this weekend. And I've been in touch with your initiatives with regard to India. I know you had an aim to get Tata Motors as a JDR here. And then Muraki-san and Ito-san of Tokyo AIM were very keen to get Indian companies listed.
Yes.
Now that has become Tokyo Pro Market. You mentioned about infrastructure funds listing on TSE or on JPX for helping fund flows from Japan to emerging markets. Now that's what part of Abenomics and part of lots of Japanese JBIC, JICA and other government policies as well. So what are your views on facilitating it further? What I saw that the financial crisis, Lehman shock, etc., derailed all these initiatives of Tata Motors JDR. Then Tokyo AIM, of course, got derailed because of a bad economic situation. But how do you plan to revive it again, those excellent initiatives that you took earlier on?
Well, thank you very much. It's too much precise the cases that, yes, we worked with the Tata Group to list in the form of JDR, but I should not explain so much detail, but because of their requirement, we could not make it materialize yet. Their conception of JDR has decoupled the Indian price. That is, a little bit difficult. Naturally, they have an ADR and GDR already, so we are still working on that. As you mentioned, we are very keen. We are visiting one after another the big company in Asia to come to Japan, and some of them responded very positively. Yes. So though they said our requirement regulation is very tougher for them. So we have to, again, relax to some extent, exemptionary. And our mission is that, again, we have two clients. One is naturally corporation, but another one is investors. We have to protect this very naive, investor rather than this strong, powerful corporation. That is a balance. So at the expense of these people, company cannot, grow up. So that is a kind of arrangement. So we are working hard very much. We will do that continuously. Yes.
Thanks very much, Saito-san. That was a great answer. Anthony. Oh, sorry, Henry. Can you, Henry, question? Yeah. And then we'll get to Anthony. There's a mic here.
Saito-san, I'm Henry Stokes, freelance journalist here. You entered the jobs market, you graduated in the early 60s, not long before the Tokyo Olympics. And you saw the whole Tokyo Olympics phenomenon from close up at a very early and impressionable age. I wonder, when you consider now the prospect of another Tokyo Olympics, you think that this could serve to brace people's spirits, encourage them, and that this will be altogether good for this country? I wonder what your feeling is if you take a historical perspective over 50 years.
Okay, great question. That one thing that's different from the 60s or 64 or something like that. The athlete comment has 100% changed since then. At that time, I was young, 63, 4 years old. The participants of the athlete was saying that we are participating in the Olympics. The medal is not a matter of the problem. Just participation is more important. That was the prevailed comments by the people, the players. This time, young people say, I need gold medal. I will go to Olympics to get the gold medal. Japanese has changed it. So this is a very important thing. For past 20, 30 years, I think Japanese lost some animal spirit, I should say. And they were very much too well educated. That's very peaceful, just friendly, no competitions. Competition was rather bad. That was the education in Japan, even today. That was the reason this loss of the steam of Japan, I think. Young people are changing. So I hope this time the Olympics will be the first physically, that will be the good physical stimulus for economy. Two things is enhancement of spirit of Japan is expected.
Thanks very much, Saito-san. Let's just have Anthony there in the last few minutes.
It's a follow-up to my previous question, really. I wonder how far you think the market will go from here, because some analysts are speculating that 20,000 on the Nikkei is probably about the limit of this particular bull market. Would you agree with that? And secondly, do you think that the shock or the trauma of the last collapse in 1990 is still a very strong factor that could, stop the market going much higher? And very quickly, finally, coming back to the question I asked earlier, are Japanese banks lending now for stock purchases?
Well, first of all, the Japanese banks are not lending for the purchasing the stocks at all. That is totally different from the 1990 or 89. So, that time, Japanese banks are just crazy about the lending the money for real estate investors as well as stock portfolio investors. That is not occurring at all today. Yes, so much healthier situations.
Can the market go above 20,000?
Well, it's very difficult for my position to say specifically the 20,000 or 18,000 or whatever it is. But what I can say that one is that on that 1989, Japan Tokyo Stock Exchange was the largest in the world. The capitalization was 630 trillion yen capitalization. Today, 450 trillion yen. On that 630 trillion yen, New York Stock Exchange was 470 trillion yen. Then New York Stock Exchange today more than 600 trillion yen. So only Japan, Tokyo, has left less than that of the 1989. That is my question, the answer. So please make a guess.
I did also ask whether you thought the shock of the collapse in 1990 was still in people's minds.
Well, yeah, but that was 1999 was a monetary policy came in suddenly to break. The central bank worried too much about the inflation. So their policy was totally wrong. they made a mistake. So they killed too much this economy that dragged last this problem. And even with the similar situation of consumption tax hike, 1999, 97, already stock market started to go down 10 months before the hike of consumption tax. We are expecting the consumption tax hike in April, just 3 months later. Nevertheless, stock market hasn't declined so much yet. That means I think a shock will be very limited.
Thanks very much, Saito-san. Maybe I'll just ask you a final question, because I happen to be speaking to the CEO of a very large European oil and gas company, and he was asking about the Olympus affair, and you did mention corporate governance. The Olympus affair was now 2 years ago. What do you think have been the core lessons and the core steps that you've taken to prevent that kind of situation from arising again? Do you think that whole affair has been satisfactorily resolved, or has it just moved off the front pages with nothing really coming in to solve the fundamentals of the issue?
You mean the
Michael Woodford, in terms of the corporate governance.
Corporate governance.
Do you feel, and the bizarre cash movements from within Olympus, and the fact that the board was essentially retained, and
well,
I ask you because even though it happened 2 years ago, abroad this is still a topic that people associate with the Tokyo Stock Exchange.
Well, as I show you this chart, we found out the correlation between the ROE and the number of the outside board members. It's too simple, but I think the objective outside the pressure for the CEO or management to pay more concern of the usage, the efficient usage of the capital will be necessary for this state. And if that start to work, I think our ROE or concern on the usage of capital will enhance. Then gradually we will get on the same railway with the European or US friends. So much rational market, efficient market can be expected in Tokyo. And I think corporate governance is very necessary for Japan. And as I mentioned already, LDP party is very keen concern on this enactment of this mandatory requirement of at least one but multiple independent outside board members. So within 2 years, we will see the quite strong requirement from the legal features as well as our rule. Then that will change fundamentally the concerned mindset of the Japanese executive managers of the corporation. But increase the enterprise value. Eventually, that will push up the equity.
So more focus on the financials, more focus on the return on investment will prevent this sort of stuff from happening. One hopes, but obviously in the US and UK it hasn't necessarily worked. But anyway, we're 3 minutes over, so I'd like to thank Saito-san for his very interesting exposition, and especially your fascinating interaction with the audience in terms of the Q&A. I think one of your distinctive aspects as a speaker is your willingness to not to give a very long speech, but to actually enter a Q&A. So I think we all appreciate that. We very much hope to see you at the Foreign Press Club again, and thank you very much.
Thank you very much. Thank you very much. Thank you.